Ladies and gentlemen, good morning and welcome to Deep Industries Limited Q2 FY24 earnings conference call hosted by Essential Technologies Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. We have on the call with us Mr. Paras Savla, Chairman and Managing Director, and Mr. Rohan Shah, Director of Finance and Group CFO. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Paras Savla to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Good morning, everyone. Thank you all for joining Deep Industries Q2 half-year FY24 earnings conference call. I hope that you have got a chance to go through our financial results that have been uploaded on the website and stock exchanges. We are delighted to report that first half of FY24 has been marked by robust financial and operational achievements. Our strategic focus has yielded substantial growth in our financial and operational performance, surpassing the results of the corresponding period last year. It is my pleasure to shed light on some key highlights from this quarter. Our order book has maintained a steady growth trajectory, reaching an impressive rupees 1,195 crore, marking a 47% year-on-year increase. Notably, this marks the 10th consecutive quarter of record growth in our order book. We are pleased to announce the recent acquisition of a significant contract worth rupees 108 crore from ONGC, entailing the charter hiring of high-pressure compressors over a period of 3 years. Turning our attention to Dolphin Offshore, we have successfully completed a QIP of 38.5 crore rupees by allotting 8,42,000 shares at an issue price of INR 458. The progress of the revival plan is proceeding as anticipated, instilling confidence that Dolphin Offshore will commence generating operational revenues in second half of FY24. We have completed the integration process, while the refurbishment of major assets is in final stages, aligning with our predefined plan. Furthermore, we are delighted to announce that the listing process for Dolphin has been finalized during this quarter. The acquisition of Dolphin Offshore positions Deep favorably, granting swift market access to offshore services that would have otherwise required significant time to attain the necessary qualification. This move also allows further diversification of Deep's business verticals and facilitates synergy benefits from existing client relationships. On the national front, India's oil demand exhibited a notable 9% year-on-year increase, amounting to 20.03 million metric ton or 5 million barrel a day in May, indicating a favorable economic momentum. With the Cabinet's approval of critical gas pricing reforms, the groundwork has been laid by us for a sustainable, affordable and secure energy future for Indian citizens. This reform is expected to incentivize investments in India E&P sector by ensuring that gas production from new wells of nomination fields will receive 20% higher prices. We remain optimistic about the robust bidding pipeline for Deep, which is expected to remain strong in the foreseeable future. With this, I would like to invite Mr. Rohan Shah, our CFO and Director of Finance, to delve in the financial performance for the first quarter FY24. Thank you, and over to you, Mr. Rohan.
Thank you. Good morning, everyone. Thank you for your presence today. I am honored to offer a concise overview of our company's second quarter financial performance. Subsequently, we will welcome your inquiries and insights. To ensure an equitable assessment, we will be assessing the figures through a year-over-year comparison. Let us commence with the consolidated financial performance. I am happy to share that DEEP has exhibited exceptional performance, surpassing the accomplishment of corresponding quarter from the prior year. The revenue receipts on consolidated basis from operations for the quarter has soared to rupees 101.32 crore, signifying an impressive 52% increase in comparison to the preceding year's quarter ended on 30th September 22. This achievement can be primarily attributed to our consistently expanding order book and our meticulous execution of orders, integrating the necessary operational efficiency. Notably, the consolidated EBITDA for the quarter has surged to rupees 48.23 crore with an EBITDA margin of 43%, representing remarkable value escalation from the quarter concluded on 30th September 22. Furthermore, the consolidated profit after tax for the quarter has ascended to rupees 29.52 crore, boasting a PAT margin of 27%. Coming to our performance, I am delighted to report that to our consolidated performance, our standalone performance has remained robust for this quarter. The revenue receipt on standalone basis from operations for the quarter has surged to rupees 91.02 crore, illustrating an impressive 50% increase in contrast to the prior year's quarter ending on 30th September 22. The standalone EBITDA for the quarter has reached to rupees 41.88 crore with an EBITDA margin of 44%, showcasing a commendable 44% absolute value surge compared to the quarter concluded on 30th September 22. Moreover, the standalone PAT for the quarter has risen to rupees 23.98 crore, accompanied by PAT margin of almost 25%. Significantly, a noteworthy 39% absolute value growth compared to the quarter concluded on 30th September 22. To summarize, the Q2 FY24 performance sets a promising tone for the first half of this fiscal year. I would like to draw your attention that in the published results, there is some typographical error in cash flow from investing activities have been observed in consolidated cash flows, which we have revised now and have uploaded the corrected revised financial statements on stock exchanges. With that, I conclude my remarks and invite any question or discussion from the floor. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Congrats for a good set of numbers and continuous increase in the order book. So my question is, since our order book is increasing, but our revenue is kind of stuck at this 100 crore mark for last 3-4 quarters, can you comment on that, please? And can we expect a jump up because I guess monsoon will have some impact in this quarter?
Thank you. Yes, I agree to it that on face of it, it appears that our revenue is more or less in line with previous 2 quarters. But yes, the order book which is growing consistently will result into revenue of only after 6 to 8 months of its mobilization. So yes, we are expecting some good amount of growth in coming quarters from Q3 onwards, and we are definitely gunning towards a good amount of growth going forward.
Got it, sir. And sir, on margin side, do we expect like 40% over which we are generally maintaining to sustain?
Yes, yes. So we have been able to secure margins over 40% in last more than 10 years now, and we would continue to maintain that. In addition, we are expecting some improvement as well.
Got it, sir. And sir, on this 1195 crore order book, what is our execution timeline?
So this order book is consisting of more than 40 different contracts, and execution timeline for each of them is different, but on an average basis, you can say it is around 3 years order book.
Got it, sir. And sir, last question is on the Dolphin side. What kind of ramp up and revenues can we expect in this second half as well as next year, sir?
So we are on time. Estimates of getting our one of major assets ready in class, and we expect that asset to come in operation by January 24. So we can expect some revenue in Q4 this financial year. Numbers, it will be difficult to quantify as of now, but yes, FY25 we'll expect for full year revenue of that particular asset, which can be around 90 to 100 crore a year.
Got it, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Darshil from Crown Capital. Please go ahead.
Hi, hello. Thank you so much, sir. Good morning. Just wanted to understand, sir, now that we've had 2 quarters done and maybe 1 month of the Q3 also, do we feel that we can go more than 20% because our revenues have been increasing? So what kind of guidance would you give for FY24 and FY25 in terms of our revenue growth?
See, as I addressed before, in our order book, once it is being awarded any particular contract, it takes almost 6 months to get into mobilization. On an average, this much time we need to give, and it is allowed as per contract as well. So order book growth will not immediately reflect into revenue, but yes, it will definitely reflect in revenue growth. And as I said, we are expecting Q3 and Q4 to be definitely more in terms of revenue than in comparison with Q1 and Q2. And we expect the amount of growth as we expected and as we are estimating we will be able to achieve here.
Okay, sir. So anything for FY25, because if we maintain this run rate of maybe 100 crores a quarter plus the additional 100 crores from Dolphin, so we can easily cross 500. So maybe, can we do, because with the new order book getting mobilized, 600 crores? Is it possible? Is this the current range that we can estimate?
Yeah, so you can calculate in that way, and you can consider that FY25 we are definitely looking forward beyond 500 crore for sure. And yes, so going forward along with Dolphin's revenue and existing order books growth, which will start reflecting in our top lines, we can definitely look for the amount anywhere more than 500 crore. Yeah.
Okay. And so this is my final question. So as we are growing, so do we have any constraint in terms of the capacity of capital that we might face that that will not help? There will be a kind of a speed bump to our growth, and any macro environment that could just any risk that you see personally?
No, I don't think so, because we are fairly placed with our liquidity in hand, and our debt equity is also very minimal, and we are net debt free. So we are all ready, and we are all set up for any amount of growth which is coming to us, and we expect our order book to grow further based on our existing bidding pipeline. So I am not foreseeing any kind of challenge in equity or funding those projects or growth.
Okay. So, sir, order wins that I'm a bit new to the industry. So, order wins keep on coming every regular quarter, or maybe more towards the year end, there are higher number of orders. And with the elections coming up, does that impact order flow?
No, so in our case, order flow is continuous. It is not like in year end it comes higher. It is not like that. So it is depending on the various requirements of various clients, and it is more or less in consistent or continuous type of form. And since our services are indispensable for our clients, so it should not have any relation with election coming, because the requirement will be there in any circumstances.
Thank you so much, sir. All my questions have been answered. All the best, sir. Thank you so much.
Thank you.
Thank you so much. The next question is from the line of Manan Shah from Moneybee Investment Advisor. Please go ahead.
Yeah, hi. Thank you for the opportunity and congratulations on good set of numbers. My question was related to Dolphin. In the Dolphin balance sheet, we've shown roughly 45 crores worth of assets as held for sale. So, can you please tell us what this asset is that we are looking to sell?
Yeah, hi Manan bhai, thank you. Yes, so this particular asset is the barge which we are currently refurbishing, and it is currently in books of Dolphin Offshore's Mauritius subsidiary, which we intend to shift it to other subsidiary either in Dubai, or we may plan to shift it in Gift City, because currently this barge is in Mexico and it will be operational in Mexico region only, and there is no double tax avoidance treaty between Mauritius and Mexico. So we want to just change the jurisdiction from Mexico to somewhere else. From Mauritius to somewhere else, and that is how this ship will be transferred from one subsidiary to another.
Understood. So post this, then post this transaction, then the taxability in Dolphin would be closer to zero, or?
Yes, so it would be minimal, I would say. We are trying to get as low as possible tax regime. So we have not yet finalized the final destination, but yes, we are working on reducing it to near to zero.
Understood. And the margins in Dolphin would be closer to 60-70%, right?
Yes, yes. From this particular asset and services, it would be in that range.
Understood. Also, we were looking to spend around 30-35 crores for refurbishing this barge. So I do not see any sort of such expense or cash flow out from Dolphin's books till the first half. So, and the funds that we have raised around 35-38 crore that you mentioned. So what is the purpose of these funds?
Yeah, so as you rightly mentioned, this fundraising will help in spending refurbishment activities for that particular barge. So this fundraise is primarily for that. And till now, whatever we have spent, we have arranged to send it from the loan which our subsidiary has given to Dolphin, and eventually it will be returned on raising this fund.
Okay, understood. My next question was for Deep. So any order wins or any updates on the two JVs that we had entered? So any progress over there?
So the first JV which we did for higher capacity of drilling rigs, there we have not yet qualified on those higher capacity drilling rigs. On the second JV with Eurogas, our bids are still under evaluation, and we are expecting to have some outcome in coming months.
Okay. The JV where we did not qualify, so was there any technical reason for which we did not qualify? You can elaborate a little bit on that. Yes,
so we had belief that with that particular JV, we would be qualifying for that 2,000 horsepower drilling rig. But somehow in tender, there was some particular requirement which even after that JV, we could not get it through. So we are working on it.
Okay, understood. Any capex plans?
Yes, so currently we are in process of acquiring 2 drilling rigs for which capex is going on. So one rig which is being deployed at ONGC Bokaro, the big order we had received last quarter, and second rig will go with a client called Ceylon. So yes, that capex is going on, and the contract of GAILKI, ONGC GAILKI gas compression services, there also we are doing some capex.
So these contracts will come in from Q3?
This 2 rig contract will start generating revenue in Q4, and GAILKI will also start in Q4 only. But yes, in Q3, 1 or 2 more contracts are coming into revenue.
Okay. And my last question was any update on the receivables of Dolphin Offshore?
In Dolphin Offshore, in one of the arbitration case, we have received in our favor the award, and we are expecting some receipts to start coming against those receivables.
Okay. Thank you. I'll get back in the queue.
Thank you.
Thank you. The next question is from the line of Rakesh Davera from 4R Investments. Please go ahead.
First of all, congrats on the great set of numbers. And my first question is regarding the cash flow statement. I have observed that sale of investments were like around 100 crore worth. Can you throw some light on that?
Hello?
Yes.
Yeah, if you can repeat the question, your voice is a little low.
Yes. My first question is regarding sale of investment related to cash flow. So it was worth like 100 crores. Can you elaborate? Can you?
No, so this is just shifting from investment to FD. So we have parked our receipts of arbitration award into fixed deposit. So it's just interchange of instrument.
Okay. And are we able to maintain this EBITDA margin with ongoing deep onshore also, with subsidiary onshore also?
Yes, yes. So in fact, in Dolphin Offshore, the margins are little high than what we are maintaining. So we are quite confident that we will continue to maintain this type of margins.
Recently, we have raised fund. So where we are utilizing it, can you?
In Dolphin Offshore, as I just explained before, this fundraise will be used to refurbish that particular asset, the barge which is there in Dolphin Offshore. And we would be using this fund to get this asset in class.
Okay. Previously, we have installed some capex also. Now, what our capex plan for the FY24?
So in FY24, in total, we would be doing capex of 100 crore plus, okay, of which we are buying 2 drilling rigs and we are buying few gas processing packages.
We should understand like this, if these joint ventures, are they successful? We recently acquired Breakling Drilling, and also we are with 2 joint ventures, right? So what about that?
I think I have replied this question immediately prior to this, but still I'll repeat that. In case of Breakling Drilling, the bid is not successfully qualified. So we are working on it. And the other JV which we had done with Eurogas, there our bids are under evaluation, and we are expecting to come to receive outcome in coming months.
Okay. Thank you.
Thank you.
Thank you.
Thank you. The next question is from the line of Alisha Mahavla from Envision Capital. Please go ahead.
Hi, sir. Good morning. Thank you for the opportunity. So first question is that is there any pipeline of what our order inflows can be for the rest of the year or in H2? In H1, I think we've got inflows about 320 crores. Is there a guidance on what the inflows can be for the full year or H2?
Yeah. Hi, good morning. Yes, our current bidding pipeline is exceptional, and it is around 800 crores of order we have bidded, and the tenders we have submitted, and we expect good amount of conversion in coming months.
The large part of this bidding pipeline get concluded in H2 only?
So it depends largely on the client side, the timelines. But yes, we expect majority of them should convert in H2 itself.
Okay. So based on a historical hit ratio, conversion ratio, can we expect order inflows in line with what we experienced in H1?
Yes, we are quite bullish and quite confident that we should get some good amount of conversion. On percentage of successful conversion, I cannot comment because at the end of the day, it's an open tender. But yes, we are quite confident to have some good amount of conversion out of this.
So got it. So my next question is on RAS. If you can share what is the order book there currently, what is the outlook like? There was a delay in demand that we've been talking about. What is the scenario looking like currently?
I think, yes, order book in RAS is somewhere around 50 crore, and the execution is not as per our expectation. So we are facing some delay in demand due to GA holders are getting extensions in their own projects. So the demand which we had anticipated of this booster compressors is not converting into the same speed which we had anticipated. But yeah, we believe that going forward it should start coming up.
Can we expect a large part of this amount to come in FY25 based on the extensions and whatever feelers we may be getting from the GA?
Yes, we believe that in FY25 it should come up.
Got it. And just a clarification, we currently have an order book of about 1190 crores. And so this will only need to do a capex of 100 crores?
Yes.
That should take care for execution of this 1200 crore order book.
Perfect.
And can you give the breakup of the order book between gas compression, drilling, gas hydration, etc.?
Yeah, so out of this current order book, the gas compression would be in range of 45%. Rigs are almost 39%. And rest is with integrated project management and gas dehydration.
Oh. And what would be the contribution of ONGC in this 1100 crore order book? Because for the inflows of 320 crores, almost 280 has come from the two large ONGC orders. So if you could just give us some split of the top 1, 2, 3 clients, what is their contribution to this order book?
So largely be ONGC, which would be in range of around 65%. Second largest would be Vedanta and Oil India.
Okay, that's great. I'll come back in the queue. Thank you.
Thank you so much. Would like to remind participants to join the question queue. Please press star and 1 now. The next question is from the line of Srini, who is an individual investor. Please go ahead.
Hello, sir. Thanks for taking my call. I think most of the questions are answered. One question is regarding the order book. I think it's been sequentially there's been not so much increase between Q1 and Q2. So would H2 would compensate for the order book growth?
See, order books, the way it functions, it's not periodical in a way that it has to come around a month or so. So you may witness that in some quarters the order book inflow would be tremendous. In some of the quarters it may be little low, but that is the part of business. But in overall scenario, we are expecting a huge amount of order book to get converted. Looking to our past experiences of the conversions that have happened in, having an 1100 or 1200 kind of crore of an order book has been unprecedented with our company, and what we see further is that it's almost 800 crore of pipeline order, and if these are getting converted in next 6 months, I think this would be adding a lot of value. So when we said that the top lines or the revenues would increase significantly, that could be witnessed from third and the fourth quarter to a certain extent.
Okay, sir. Thank you very much, and congrats for the great quarter.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 now. As there are no further questions, I would now like to hand the conference over to Mr. Paras Savla for closing comments.
Thank you everyone for joining the Q2 conference call of Deep Industries Limited. It would be our pleasure to answer your any question or queries further. So if you have any further queries, you can directly reach upon to us, or you can route your queries through our investor relationship advisors, SNCL. Thank you so much.
Thank you. On behalf of AlphaStreet Technologies Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.